Good morning. Welcome to today's weekly update. Yeah, this promised to be an important video for everybody that wants to learn or is learning Forex, for us to really understand what the game is all about. I may use the word game, but it is actually a serious business. Oftentimes we use the word manipulation. We use the word see these wicked people. We use so many words to describe things, but really those words are used when things are not going our way. You can't afford to be rubber stamped and say, I've done my analysis, to the left, to the right, to the center, and this is what it should be. And when the analysis is not working according to what you had probably projected, you can say, oh, see these wicked people, or it's been manipulated. I would say that this market is not manipulated. Or I would say that these people are not wicked, because if indeed they are wicked, there won't be back and forth movement. There won't be opportunity for you to even get into the market. But when you get things right, you will understand that the market is actually very fair. The only problem is that we have not mastered or understood very well how this thing goes. There are rules. There are pointers. There are things that will tell you what you are dealing with is not correct. You will say it's manipulated if it has broken a limit that you are telling yourself that it shouldn't get here, it shouldn't get here. But when it breaks that limit, why don't you tell yourself, definitely I'm wrong. Once it gets to this point, I'm really wrong. It may pull back, it may begin to now do what you think you've been planning or you are projected that it's going to do. But because it has broken a point, what you think is now trying to do is not what you think is going to do. That means it's doing something else, which you must quickly align on yourself to understand. So for me, I would say this market is not manipulated at all. The market is designed to do what it's going to do, but how you are able to piece this information and use them, and how you gather pointers along the line that something is amiss, something is not, it's being cooked, and what this, and for you to understand it, is what is very important. For instance, when you say, okay, we are in wave 4, if we say we are in wave 4, probably we have looked at all the structures on the higher time frame, the lower time frame, and say, okay, it seems we're in wave 4. Yes, we're in wave 4. It's like 90% chance that we're in wave 4. When you are trying to mark your levels of wave 4 and say, okay, we are broken more than wave 4, then have we really broken out of wave 4? I'm going to show you all of that for us to really understand. what are the things that will suggest to us that we are in wave 4 or when we are broken out or not? Oh, after wave 4, then the next thing we have to do is wave 5. We are rushing. Wave 5 is not forming. It's not going wave 5. Oh, it's starting wave 5. Let me begin to count. And when you are counting your wave 5, maybe the wave is still in wave 4. So when you count and it's not moving, the next thing, see these wicked people. This market is being manipulated. Those are the words that we speak. But when you are grounded, really, when you expect market to do something and it's not doing it, and you have looked at all the possibilities within that structure, immediate structure, and market seems to be doing that, and is wasting your time, can you quickly project that market is trying to do something, it's trying to print something beyond what you think? Because when structures and fib levels are being broken within your own estimation, then it's a pointer to something is happening beyond what you are yet to see. Can I now see it and understand? When you gain knowledge and mastery, that is actually when it's safe to commit lots of capitals into this business. Don't ever be in a rush, because once you're in a rush and you are on the wrong end of the stick, all you now be doing is, okay, how do I salvage my situation? How do I do all of this? How do I minimize things? You must be very disciplined in this business and tell yourself, if nothing is not working, what it is. Now, I'm going to go to what happened yesterday to explain, because I did drop a message maybe around 1:23 for you to close your order. And why I said that, it's because of what I've been picking. Now, if I go quickly switch into 1 minute time frame, sorry, 1 hour time frame, but I'll still come back because this training is very important. Let me quickly switch there. This was our low. We add this low and we call it wave 3, which is 3.5. Now, what we know that is wave 3, and it has to be wave 3.5, it has to run 5 waves. Those are the things that we know. And we looked at this 1, 2, 3, 4, and 5 truncated. You cannot argue that this is 5 waves. You cannot argue that this is 5 waves. And it's the low for now, up to moment. Then from this low, what we want to do, we want to see a wave 4 major. And then everything is what exactly is happening. And in that wave 4 major, we could see this as a single swing, or we could see it as a 1, 2, 3. So a 1, 2, 3 is just, can be a single swing, but it's actually a 3 swing on the lower time frame, but on the higher time frame, we see it as a single swing. This also is a very clear swing to the downside. Now, where the problem is that if we had thought that we had finished the whole of wave 4, and we are coming down, and we'd add this as 1, 2, 3, A, B, C, or A, W, X, Y, and that is what we thought, because when you are labeling, you don't get fixed with your labeling, because once your labeling is messed up, then you are scattered. You don't know what you are doing again. You don't, No, I've marked after WXY. What is next? This is what is supposed to be next. No. You are projecting. That is your own thought. And when something is changing, you must quickly change your narrative. Okay, maybe they are not done. Because it's not always going to answer to your own projection. Market is not going to answer to your projection. Market is not doing you a favor. Market is trying to do what it's going to do, and is trying to leave footprints for you to pick. Now, if you don't now pick the footprints, don't say it is manipulated. You are not just picking it, and that is why. But you must be well equipped to pick it. And when you are very good at it, then what will not happen to you is that you will not begin to lose your money. You will know how to trade with caution and trade cautiously, not being afraid, but you are cautious in your approach to trading. Now, back to what I was trying to say, that ABC or WXY can be a WXY, probably a 1 degree and a big W here. It can be that. It's going to be corrective once we're not seeing a break out of 161.8. It's going to be like that. So now this came down. Oh, you are thinking that maybe this could be wave 5. Oh, sorry, wave 1 of 3. You are thinking is wave 1 of 3. You are looking at everything in here. Does it support that? Maybe this may have supported 1, 2, and a 3. If that is what you are thinking, that these are supported 1, 2, and a 3, let me quickly flash somewhere so that you understand what I'm trying to say. Let me flash here. Let me take off all the drawings. Good. So let me flash here. You are saying that this is 1, 2, and 3, and 4. And this is a 5. You are not sure. So if your peak of 2 is here, because these are things that you have to do, just assume. And you say this is what? A 2 here. From that point of retracement back to what you think 4 is. Okay, this actually still agrees with a 4 because it has not broken up. It agrees with a 4 at this point, okay? Now, where the thing is messed up is when it broke low here, and you are trying to count the internal wave of the 5th wave here. This is not a truncation of waves. This is not a truncation of wave. This may have been ABC of that 4, and where this one is the primary 4 here. Now, this one going down, you ask yourself, what are we doing? What are we doing? I think I'd shown us something, what are we doing here? Is this a 1? Is this a 2? Yeah, it will form like a 1 and a 2. Then, can this one be a 3 to these within the last wave of 5? Can it be like that? Another thing, because we are done a 3, a 4, and we have to finish a 5 to have an ABC of 2 to go back to 3. That is what we are projecting. But now, in trying to seek this big wave and not run it down like this, then we come here to say we want to pick a 3 from here to the low here, back to the top here. And this barely did 1, 2, 3. And what you saw next was that there's a break of structure here at this point. Then forget This is not a wave one. Don't even try to manipulate yourself, because it's you now that you are now manipulating. It's not the market manipulating you. Market has shown you that this is not what you think it is, because this cannot run wave 5 and just be uncompleted here. So it's an ABC. These are things that we pick along the line, which now tells me that market has not even commenced 3-1, maybe 5-1, talk less of going back to do a 2. So you quickly align yourself, because the wave in itself does not look like a 5-wave structure. So it could be a B or it could be an X. So if it's that is what it is, because also you don't, when you are coming down, you don't expect the X to break the low. Maybe between 85 and 78, it's going to turn up again. So even though it's impulsive to you, it is not a motive wave. Anything can be impulsive, but a motive wave developing is 1, 2, 3, 4, 5 structure. That is what we know about motive wave. Motive wave can be impulsive or not. It doesn't have to be impulsive, but motive. Now, this is also impulsive. This red here is impulsive. This also is very impulsive, and this is impulsive. It doesn't really matter. So we are pretty say that, okay, ABC or WXY in a small degree to give us a W, and this is an X, and it's going like that. So I'm teaching us something. So, and we come to this point. Okay, coming to this point, we know the history of this also as an A, B, and a C. So the wave format here and the structure here is different from this structure. But when you look at the overall structure, it now does look like, oh, a big W, a big X, and a big Y. Then after a big Y, what do we want? We want to come down and do 1, 2, 3, 4, 5. Now, the first clue again to tell you something is amiss is this wave to the downside. When you see this wave, can you count 1, 2, 3, 4, 5 here? No. It's kind of, there's no 1, 2, 3, 4, 5 in the middle. Even if you go to the lower time frame, you won't see anything 1, 2, 3, 4, 5 in this single, just very sharp move. And you saw this, and it came here, and it's going up again. So these are clue when you expect a motive wave to develop after a correction, to say we are now continuing, and you are not seeing that. Don't force it. Market is not manipulated. It is you that you are manipulative. Market is not. So, but it's telling you something is happening, that this thing is not complete. It's not complete. And this also went up correctively and messing with our, and toiling with our edge. And we got here. We came down to break the low as if we are going up, but market is trying to print something else. Market is trying to print something else. And now we got here. We are still thinking in our head, maybe this is a 1 and this is a 2. But there's also a catch here to have told us this may not be a 2. Let's see. From that point down to this very low here, this has broken 85 and it turned at about 90. That is the problem for me. You might think, oh, it is manipulated. Actually, when they want to do their stuff and, go, by what you know as fib, relationship, and all of that, markets, market is imperfect, but imperfection to now break 85, touch 90, is telling you something else. So the 90 against this one might not be what it is really, but market is trying to print something. I can't see 5 waves in here. Even if you say this is 4 waves, this is wave 4, you really have to go deep and say, can you pick a primary 2 here? That's a problem. even if you forced it to say this is 1 and this is getting here, this is another sign to tell you, you can actually trade any way you want to trade, but you must know rules to guide yourself that, okay, I think we are going to do this. Can I, but the important thing in trying to trade also is that, okay, how many pips am I going to gather here if I'm trading against this thing? So does it really worth all the stress I'm going to give myself, when I'm trading and I'm only scampering for like 20, 30 pips? Does it really worth it? What am I going to get from here? So maybe I should just be more patient. And this also came down like this, because if you are thinking that, okay, this is a possible 1 and a possible 2 and a possible 3-1. So if it is a 3-1, also, is this 5 waves? These are questions we ask ourselves. And forget we don't know. And market begins to do this. I said in the video, I said, the way this one is going up, market can go up and to break the top again and go up. And I said that. The reason why I said that, I'm going to show us, and what the projection is I'm going to show us. Now, we had this trust down. It's not convincing as if market wants to come down. Market may have decided to go more down anyway. But again, we must not lose sight of what we know for motive wave and a corrective wave. Forget if it's impulsive or it's not impulsive. Forget about that. Market will may throw big candles just to throw you off balance and say, oh, we now intend to go the way you want to go, because it's big candles and impulsive. Now, let's measure here. Let's see what is happening here. For our learning, let me go inside of a 15 minutes time frame. Now, so this was what happened. And remember, we trade this move, and all we were trying to do is just to, it may have looked like a 2 here. Yeah, we're trying to go a 3, a 4, and we're trying to do a 5. And at some point, we had our stop loss here, and market broke us out. Yes, fine. You have taken something out of the market. That is what is most important. In case it does not go by analysis and is changing, you have taken something out. So losing out will not be an option. Now, market did this. I was not in this market at all for no reason. But I kept warning that when market is like this at times, it could be a very bullish move. It could be anything. And market did this. Yes, when market did this, I was not comfortable. Even though we had this sharp reaction, I'm already telling myself something is amiss here. I had this sharp reaction to the downside. Market, I want you to focus. Don't go and look at this. Just focus on what I'm trying to say. At times we try to get ahead of ourselves and not really focus. You don't preempt, but you try to see what market is trying to print. So if you look at this retracement, this retracement is close to 100%. This is where it is. So I will be foolish to think that this is coming down. I knew it was not going to come down. What I was trying to do is probably to trade a pullback and see where the pullback is going to get to before we turn up again. That was what I was trying to do. But at the same time, I don't want to also buy. And if I'm going to buy with a very tight stop loss. I don't want to sell big, and I don't want to buy big. I want to scalp it. That is the meaning. Because I knew this is not a 3-2, if I'm thinking that this one is a 3-1, this is not a 3-2, it's almost 100. It has retraced itself up to, but I got this reaction. So what can I make out of this reaction? Now the thing that probably this is an A, and if this B is going to go down, how deep is it going to go? So I looked at the immediate structure here and saw that this structure in the 5 minutes time frame is actually a 5-wave structure to this point. Then this went up as a second structure. As the second structure, did it do a 50 or a 40? What did it do from that point? It's just did like a 40. But how would I not see the internal structure of a 2, and I will come and see the internal structure of a 4 on that time frame? Those are things that we tell ourselves. It's not likely. 2 is usually, at times very bigger than what we think. So, yeah, this may have come down in 1, 2, 3, 4, 5. Is this one a 4? Is this one a 5? Now, if I go inside of a 5 minutes time frame and still come back to that, let's do it. I want to show us how to really understand how to deal with all these things. Now, looking at it, these ones look like a 1 and a 2, and a 3 here, a 4, a 5 to finish this. Now we now have this, which could be a big 4. Anyway, if this is 3 and a 4, it could be a big 4. We have had 1 and 2, it could be a big 4. And we add this to the downside. This one goes to the downside. Does it look like a 5? It's actually very big. It's more than a 5. These are things that also will begin to align me that something else is happening here. You see, it's more than 161.8, and I can't see a 2 even on this time frame to see a 2 here. So it was a kind of doing like an A and a B, and for me to have a C. And that's the way it went, like an A, B, and a C. So it became an A, B, and a C. A big A here, this in the middle, a big B. And if it's forming and it's not yet, it's going to go down as possibly a deeper correction of a zigzag. I was anticipating that also. Now, the catch also it's in here to look at the B structure that is forming here before we got here. I'm looking at this possibility of this one being a B that will not take the whole of this, turn more down before they go up. Apparently, as the things turned out, this was the end of this correction and they were trying to cook something else. But here is where you pick and try to understand that this one went up as the first. You can call this one an A. You can call this one a B, and probably an A or B or a B or B, and you want to see a C of B. And if you're going to see a C of B should have gone outside like an A, B, and a C of B, then you turn down to do the C before you now go up. Now, it could still be because you expect the last C to be what? To be 5 waves. And you are trying to count. And this one had given you probably your wave 1 and your wave 2 around this area. But one thing about corrective wave pattern is that in you trying to now do, because it's corrective, if you're going to do a C where you have probably an A, B, C of that corrective wave, A and a B, your C most of the time does not extend beyond 161.8. All of the time. It's not most of the time, all of the time. So if you don't know that this thing is going to be bullish and break above, and you come here to say, this is now your 1, and this is now your 2, because you're saying that this is A of B, and this is a B of B at this point, and you're going to do a C, because that is the way you are aligning yourself. This is the first correction of A to the downside, maybe A in the black, and you are doing a B because you think you are correcting this to go more down before you go up. Yes, there's nothing wrong about that. So you now say this is A part of B, this is B part of B, then the C part of B is going up. So from here to this point, you are trying to pick the C part of B as a 1 and a 2. You may even pick the whole of this from here to this point as your 2. And you say, okay, maybe from here to this point, and to this point. And once this 1.8 has been taken here, that is where you begin to tell yourself something else is happening here. So you know, or if you decide that, okay, yes, they're going to do, yeah, it's the same thing, because it's the last part of C and it's breaking up, you should know that this is not what is expected before you turn down, because this has got to there, it shouldn't be more than here before they begin to come down. It is around this place, yes, it is around this place that you should expect that this thing should have turned down. If I go inside of a 1 minute time frame, let's do 1 minute time frame so that you understand perfectly what I'm trying to say. Okay, so this is 1 minute time frame now. So we said that this is probably an A part of it, or B. And we are saying that the B part of B stalled here. So we want to see the C, A part of B part of B, C part of B, and you must be disciplined with it. So just follow it. Good. So A part of B part of B, which is the new low, and we are going to do C part of B. Now, in our C part of B, we expect 5 waves, and it should not exceed 161.8. That's what I'm trying to say. So if this is 1, and this one came down collectively as a wave 2, and this one is going off as also like a wave 5, you can see the way it's going up, higher, low, higher, high. Okay, so we are trying to pick what it's trying to do. Now, we come here from the eye of what we got as 1. Oh, where is it? It's not, that is not the eye. That is not. Okay, yes. Let me push this one up. Because now, this is B here. So this is 1, and this is 2, okay? So we'll come here from this point to this point, that is 1, to come to 2, which is here. So once is 1.8 should be at this level. Let me use black to mark that point. Once is 1.8 should be at this level. This is a training. Of course, it could bounce back between 100, between 127, but it shouldn't exceed 161.8. So price reacted before air to give us what looks like a 4. That is one thing. It looks like a 4 because we have done a 1 of that, the C part of B now. And this is a 2, correct? And this is like a 3. It gave us the 4th of a 3 here, and it was going to give the big 4 here, correct? But in our attempt to do a big, if the last 5, it shouldn't break here. It broke it. Don't say they are manipulating. It broke it. It's something else. This is where you're supposed to go out. This is where you're supposed to go out, really. But let's continue to see. So you're supposed to have get out of this market at this point before all this one happens. Where I told us to get out was when I saw that this had happened. I said, this is not what I'm thinking. So everybody should get out. Now, let me now show you something. Now, when price did this, and you call it a big 4, and this is what you call a big 2, sorry, a 5, sorry, the 5 to finish and to come down. And this one was coming down and to do a 1 and a 2 with this, and you are projecting this one to go. Of course, you don't jump right into it. It has to break this structure to the downside. Even if it breaks this structure to the downside, it could have been an extension and still want to go up, because from here to here, still fell below 161.8. So you may be thinking that, okay, this one could actually be an A and a B, and this one could do a C, because it's almost 1.8 is going to do an extension to the downside of at least 123 before they go up again. So you are trying to see what, so if it broke below 123 to the downside, then you know that is a new wave. That is just what you are aligning yourself. But eventually, this one came down here, give you this, and price began to go up and go up, violated 85 of this move to the upside around this area. Once it does that, it's telling you this thing is going to be very bullish. That's a running flat. At the end of the day, it's a running flat. So it's an A, B, and a C. That is what it's trying to do. So it's not done yet. So it gives it as an A, B, and a C. See this, and it's breaking up. Usually when there's going to be emergency rush to the other side of the move, that is when market gives you a running flat. Market is really in a hurry to push down to give you more depth in terms of correction, and is doing a running flat. Market is going to move and move explosively to the other side. So at this point, I said, if I had not told you to leave here, and I was seeing this, immediately I saw that this was like a running flat, I said, close your trade. So, and if you were in this trade and you didn't see it, because you would have probably lost a very few pips, and that's all to it. I said, close your trade. I don't want to be in this trade. And I don't even want to buy it because I can't stay watching. Well, I had to see what is going to happen. So from the point of close your trade, and this had happened. From here to here, about 80 pips had happened. Okay? Now, with the news, this happened, and you're telling yourself they have gone up, oh, they are coming down again. They're just doing, no, they're not just doing anything. They're not just doing anything because you have not seen this possibility. Me, I had seen the possibility of trade doing this, and I know that this trade can go up all it can if it likes, break the top, is coming down. So I had seen that possibility that this may happen and price will still come down. But when? And that is what we're going to discuss. So you stay with your analysis. It's not going that way. Lose your small peep. Be watching them. Let me go back to 15 minutes time frame. It's when you carefully, do your analysis and see that things are not really going the way it's breaking your structure, then know that something else it's happening and you must align yourself. Let me go to gold also to explain to you what I just did here before. I've not even gone into probably began the proper things I want to teach us today, but I just need to let you see how to make decisions and how to stay with your decisions and, stay off the market. I told us that this is possibly an A, and this is a B, and that we're going to come down and see a C here. That's what I told us on gold, A, B, C, because this also is an impulsive, which is like the fifth part of an A, B, C, which is correct. And the price is doing this one for us. Now, what price is doing also is akin to a running flat here. Is akin to a running flat here also that we just saw. Now, in gold, coming down, if this one is a 4 and a 5, or A, B, C, anything you call it. But this is a new move to the downside, and we call this one an A. And that the B part is what we are trying to dissect, that this may be an A and a B part of it. And I measure this, a retracement that should not go beyond 100. Yes, if it takes 100, is fine. I was still expecting price to probably do all sorts and probably come here, but price should not break this point. Immediately price violated this point, I don't have any business trading this market. I will not even go there. If price takes it, at times it's only because we don't have time to analyze. If you set your alert or notification and it say, okay, I'm there, you look at the reaction that you are getting there. Is it giving you a motive to the downside in the first minutes? Within the 5 minutes or so, is it giving a motive to the downside, if it's what it's getting? And okay, let me see if I can get a pullback almost immediately to begin to sell. That is what we want to do. But when it breaks it sharply like this, I'm not in this market. I want to see what they are trying to print again. So that's an example. Just is very brief example. When the price got here, it alerted me and I saw it. And this happened and it broke it. I don't want to trade this market now. I'm not coming down here. Let's see what they're trying to print. So that's how you can get disciplined. So let us now go back to the business of the day and now begin to do our own analysis so that you understand what market. So let's go to DXY. Let's go to the daily time frame on DXY. On the daily time frame on the DXY, We have said that this is like a wave 1, and that this is an A. And from here to here, we said is a B. From here to here, we said is a C. And are we at the end of this C? That is what we want to understand, okay? Now, remember also, anybody could have said this is an A, and this is a B, and this is a C. With the C, it's supposed to be coming down, and price turned up again. You would have said this is manipulation. Because that is, you think it's every ABC, then you have to move. You have to look at so many things that you are calling your ABC before you move. You say this is an A B. Okay, it went up like it's 5 waves motif. And we should now begin to come down. So you now begin to see this one as a possible 1 and a 2 and a possible 3. And you saw this price action and it's going up. So and when it's going up, we say this is 3-1, 3-2 is going up. Not until it breaks your head and your bubble. Okay, what are they trying to do? Now, from here, if this is actually a 1, and this is a 2 to this point, this should have done at least 161.2 to the downside. It's not going to give me now because I don't want to, that is not my aim. I don't want to measure now. But what I'm trying to let you see here is that the first correction being of an A, later we now knew that this was an A of B, B of B, and a C of B. That was what we saw. And A of B, B of B, and a C of B looks like a three waves to you, but this is in your C of B, A, B, and a C. And this one ran in 5 waves on the daily time, on the lower time frame, which is correct. Now, could it be what you are looking at here as an A of B, B of B, and a C of B before C is what is playing out here? Could it be? Should I go over it again? An A, this is B wave. And we said this is A of B, a B of B, and a C of B. Before we have a C, we had a C here. So could it be that, okay, we are seeing an A of B, B of B, and a C of B before C? Is that what we are seeing here? Now, if that is what we are seeing here, there's also a limit. So we're going to look and deep into this to see, understand that. So let me take it to this part. Now we said, if this is an A, that we are calling the fourth wave now, our 2 is here. So we are saying this is an A. Can this be an A of B, a B of B, and a C of B, and we are doing a C? I thought of all of that possibility when I was trading, because this thing is highly corrective. And again, I had not seen what would give me a 5 way to the upside to say this is what wave 5 to finish up the wave and now say probably we are coming down. The fact that this one had thrown itself down like an impulsive wave, to me, does not make any sense. I'm not drawn in to sell. I'm not drawn in to sell because it's like this. Oh, we are coming down. No, I don't. I'm not seeing that. I had to look at the corrective wave format and count it properly. This one looks like an A. We want a zigzag, and our zigzag to the downside, probably here and here, is looking like a zigzag. And we said WXY. After WXY, we should do a 5th wave to the upside. It's looking like, oh, we are doing a 1 and a 2, and this is not pushing up, and we are breaking some stuff here. It tells you, no, that is not it. So once we came down and break this level here, you do, that is not it. Realign yourself. So in the end, it can only be an A of B, B of B, C of B, and we are doing the last one, because by the time it's turning up to do a wave 5, you are confused. And that wave 5, if it's going to go up, it's not going to go up sharply. It's going to start in a very corrective manner of is 1 and 2. And from the third wave, that is when you're going to see big candle to the upside, and now they will change the trend. I still don't believe that they are ready to change this trend. And if they want to trade this trend, they have to break the structure of 4 to the downside before I believe that they want to change. And that is where I want to take my own risk, small risks below here to say I want to buy. If it breaks the structure of 4, then I now know that, okay, structure of 4 is broken. Let me wait for a retracement and sell. Not until that, I want to be a buyer. If I go down into the 4-hour, this is the 4-hour. This is the 4-hour. I said this is an A, and this looks like an A of B, now a B of B, and a C of B. A C of B, and we are turning down. Turning down, if it's going to be a motive wave. It doesn't look like a motive wave to me. Even on the 4-hour time frame, it doesn't. It's like a 1, 2, 3, or A, B, C. That's the way it's looking to me. It is not a motive wave. And you must also be wary when you are seeing things like this. It's just an impulse and nothing to it. You always see an impulse. And an impulse is, they're like C. But when you count the internal structure and it's not giving you a motive format, then just ordinary impulse might just be a C wave or X or B. So those are the things that will give you an impulse, a C part of it or X or B, like a C here. And also this is like an X or a B, and another C at this point. Because once you have, and this is like A or B, B or B is C, and a C or B, it's like A, B, and a C. So that is what you expect. And the last C, that is what I can see here now. Now, being a last C, and we are now seeing that this is probably an A, and the whole of this complex B, as giving us an A, B of B, and a C of B, and we are seeing this. That's a large thing. So in trying to now see this, that it still works within what we see as a correction, we can now say this is like a W here, yeah, a W here, an X here, and we're now seeing a Y. That's in a bigger time frame. That maybe probably a daily time frame. We're now seeing an A or a W, an X, and this one is going deeper. Okay, so if I bring my tools out now to do our measurement, so we don't want to see it break beyond 161.8 because it's a C, okay, or a structure of the 4th wave. So, or I can even still call it an A, which is a big A, a big B, and I'm seeing a big C here. So in that regard, if you want to take it down, you can say from this origin of A, the origin of A we come back to this, which is the end of A. We'll take it to the B, the C of B here. So we know that this is 123, or let's say this is 127. Let's just use this one as one between here and here. That is where we expect on the DXY. So this is what we expect on the DXY. This is where we expect on the DXY to tick. Now, is this more than wave 4? That's another question that we have to now answer. Remember, this is our 2 here. Our 2 is here. This is our 2, okay? So let's look at the retracement of what we have from these 2 in the green. Let's take it back up to the 3. So our 40 is at this red. If price should break this 40, we are doing something else. Just know it. And our 38 is at this green here, okay? So for me, if I want to do anything, I just want to pick a buy order around this area. Then I'm going to count the internal structure of this wave to be a buyer. And in being a buyer, we may go all the way to break the top or not. We may just truncate it, but I'm going to be counting the internal structure. It's not going to give me an ABC complex. It's going to be straight 1, 2, 3, 4, 5, probably an ending diagonal or whatever that's going to give me if I get a reaction here. But I don't want to sell from here. That is the point. That is the point of you trying to understand what the structure is trying to print. Even here, we can now begin to see that this is an A of B, B of B, and a C of B here, and we are doing a C. So the same thing, if you take this also down to the US dollar index, dollar may be going weak. Yeah, that's a sign that the dollar is getting weak, but it's not done. It's the same thing that we are seeing, you know, and a W, A, B, and a C here, you know, and we are here. So this is 38 here, or is it 40? Let me see. This should be 50. We don't have any business here. By the time you get here, I mean, you don't know what you are doing. You shouldn't actually break 40. So let's see. From 2 in the green here. Yeah. Okay. Yeah. So the green actually is what is the green here is 38. So 40 is here. We don't have business breaking this. That's what I'm trying to say. We don't have business breaking that. So it's still within the 4th wave major, okay? And if you want to understand what this one also did to the downside, just like we said, let's look at what it did to the downside in terms of from the beginning origin here back to the W here in the black. Then we'll take it to the B here. So, yeah, in this kind of situation, you can see that it has broken 127. So you don't stay with 127 alone, because it should not just either cross 161.8, which is below this point, but below this point is not important than this area now. 161.8 is not as important as this limit. So we must understand that. So once it's 1.8 is not relevant here, but this limit is what is relevant. So price may still, get here or not, but counting the internal structure of this one would help to know where this thing is going to turn to the upside. So with that said, let's just take that we have learned to the euro dollar. I'm going to be ending soon. Now, on the euro dollar, so if you the same thing, we say this is an A B, and a C in the blue here. So we want to see this is an A or B or B, and a C or B here. And we are going up. So what we want to do is from the beginning of that wave 3 to where A is, which is here, and back to C, here. So this is our 100, our 1, 2, this is 123, and this is 127. So we are getting reaction at almost 127. But here also, we know that once it's 1.8 will be a last place. Okay, but of course, it is not as important as where fourth wave supposed to be in the scheme of things here. So we know we could probably still, once it's 1.8, once we break this area to the upside, we are bullish. So we hit another wave entirely. So once any day, anytime we come to break this one to the upside, then we are back to buying. So this is not what is happening yet. So forget that this one being like this. These are deciding area or area to decide. You look at your DXY, you look at your euro dollar, US dollar index and euro dollar to decide the fate of whatever is happening here. I've not seen the fifth wave to the downside. That is what we are saying. We have not seen anything to tell us, oh, is the 5, we have not seen the 5 wave of, if this is 3, we have not seen it. Except that, and if we want to do a bigger correction, it's really not throwing it deep to give us a big ABC to the upside. I think the way this thing is going, it may just finish and end the trend and begin to go up. But I'm still expecting, a move to the downside. So where is 2 here? Okay, so this is 2 here. This is 2 in the black. This black is 2 here. So to the 3, to the third wave. So let's pick this. From here, which is 2, the primary 2, 2, here. So with this, okay, if that is correct, yeah, from 2, good. So our 38, this is 50. Okay, so um So our 38 is here. And 40 had been taken in this case. These are 40 here had been taken in that case. So we now have to look at the other two instruments. We have to look at the other two instruments. So this is a immediate primary two here of the bigger wave, not the two up here. This is very primary two here. Let me see. This is a very primary two here at this point, but this 1 and 2, this is what we have to consider. Now we may be getting to the end of this also. We have to look at the internal structure of that wave. Now, this is what A part, and this is B part, and this is the C part. So looking at this is the 38 level, which is gone. Price broke 38. And this is 40. So I don't expect price to hold much above here. If you have to see with 5, really, I don't expect price to hold above that place. So if you have to see with 5, and this is where it's an L of, where we make decisions now. And we try to take a small risk here. We are going to be looking at the other two instruments also to say we want to sell. Now, this eventually this is on A, B, and we're now beginning to see a 1, and a 2. So this one is an A, B, C of a 2. So at the end of the day, that's what it is. This one is a 1, A, B, C of a 2, and the whole of this is the third wave, and we are seeing the fourth wave here, the 3, 4, and the whole of 4, and this should be the last wave to the upside. Anything more than this, we are interested in this breaking the low to know that we are now into the last 5 waves, and wave 5 that we've been expecting. Otherwise, it won't make any other sense again. In attempt to count also the wave format, of course, we've gotten like 7 swing already. If I'm still going to come back to that, or maybe I should quickly go back to that for us to count how many swings that we've had before doing this. Okay, so we started from here. This is 5. So no, that is not 5. This is 3, 5. Okay, this is 3, 5 here. So if you want to count the swing here, we say this is 1, 2, 3, 4. That's 4. 4. A 5. This B part is 6. This is 7. Okay. And this is an 8. In fact, it's like 11 already. That's 8. 8 here. This is like 9. This is like 10. This is like 11. So if we're counting 11 swing, this should be the last swing. And this is the last thing that we can expect of a correction. Should I go over it again? In this format, this is 1, 2, 3. We got that 1, 2, 3 to give us an A, and this is a B, which is number 4. Now, in our B, that is now divided into 3, This bit that is went to 3, we had, this is like 4 now, okay? This is like 5, ABC part of it, 5, 6, 7. Then we have an 8. We have a 9. We have a 10. And this is 11. So that's like an 11 swing already. So let's now go back here and see how to begin to plan. Can this one still break up? It's not impossible. But how to project it, usually if it pulls beyond 161.8 from here, it's telling us that that is probably a wave 5 and it can get truncated. So this is at 1, 2, 3. You know, most of the time, of course, we can get reaction around that area, 1, 2, 3. So it's this at 123 and we are seeing this reaction. Are we still coming up here or are we selling from here? We are good to sell anytime from now. So, but selling from here, are we going to sell from here? We need to see the internal structure of this. Is it complete as a 5 wave? Let's go inside of a 1 minute time frame. Even though we are doing a 1 minute time frame, it doesn't mean that you have to, you know, be rigid and say, oh, it has completed it. Okay, this is like a 1 and a 2, and this is like, you know, a 4. The 3 here, the 3rd wave here. Let's see. If this one is 1 and a 2, we are digging inside. If this is a 1 and this is a 2 here, a 161.8 is here, which qualifies this one to be a 3, and this is probably a 4, and this is like probably a 5, you know. So it's not, so this would have ended a 5. We may be seeing emergence of a new wave. Of course, this structure is immediately taken. The structure here has been taken, and the structure also here is about to be taken. This is a major structure here. So once you take this, the price is reacting at this major structure of 4 here, of 3, 4. So you know, it looks as if we are trying to come down. So it looks as if we are trying to come down. But in trying to do that, also we have to look at what is forming here. Is this coming down like a motive in the primary? So if it's coming down like a motive in the primary, we have to see that this is, if this one is like a 1, 2, a 3, 4, and a 5 here, and this is a 2 here, this is a retracement of 50 or 61.8, which is correct. But we have to see if this one is a 1 and this one is a 2, we have to see this go down to break 161.8, which is here in the blue. So an extension of 1 to 2 here gives 161.8 here. This one has to come down to this point to give us a 161.8. So once we have this one as a 161.8, then we can probably see a 4 and a 5. That further decline to the downside. Do an ABC, plan to enter as an ABC, because if indeed it's going to be a motive of the 5th wave, then it's going to come down in this primary cycle, because this is 1 minute time frame. It's going to come down in 1 minute time frame, finish a cycle of 1, 2, 3, 4, 5. It's in the middle now. It's not done a 3. It's not done a 3. So you have to do a 3, a 4, a 5 in that 1 minute cycle. Then we plan to enter at an ABC correction of that to sell. That is what you can plan. So without rushing. So let's see how this one, you know, plays out. Of course, this last wave, when it's taking up, it has taken the 4th wave already. It's broken the 4th wave here. It's giving you a sign. So, but we need to see, because this is 1 minute time frame, we need to see more clearly. Of this last wave, that last wave, we need to see what we are dealing with. I'll soon end. So at this point, a break out of 90 here, a break out of 90 here will now tell us, yes, we are actually in, on the right course, okay? So a break out of there, out of here tells us, but we are seeing, let's do a primary dip, break this line first. Once we break this line, it's like a confirmation that yes, it's a deeper, now we are going down on a 5 wave and we should buy an ABC pullback then to go further down. You don't want just to pick this one in the middle because you are rushing. It's a 1 minute time frame, it's early, very early, very early. How many pips is that? So you're not going to lose much, but it looks like that is what is gradually developing. So we need to see. And if they want to break up, let's see. That's about 25 pips. We need to first touch this area. And in our touching this area, price should not come and take up this high. Price must first touch this area as a 161.8, and around this area, try to turn up. Probably without breaking here. It could break it, no matter. Once we see a fourth wave, we must recognize that we are seeing a fourth wave. If this is wave 2, and we are seeing a 3-1, a 3-2, and all of that happening until we break here to finish 3 proper, then we should see a fourth wave and a fifth wave by a pullback of ABC, then sell. That is what we are anticipating. So a break here is a proper break of wave 4, which most people is going to wait for them to break properly a wave 4, which is the limit here. Look for a pullback and buy, but price may not do that. You may pick all those signs as this one is developing. So it's early days. We need to cross this first and see what next. So I end today. See you in the week.